Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm going to share some thoughts on the trade desk. This is a stock that I've been thinking about for the past couple days, thinking a lot about and reading a lot about over the past couple days because it had a pretty big downturn after their most recent earnings report. You factor in also that the market itself is on shaky ground. And you can argue that if there was ever a good time to buy Trade Desk over the past 6 to 8 months, then we could be staring at it right now, depending on what you believe will happen in the future. So for this video, I'm going to share some of the things I like about Trade Desk stock, some things I'm concerned about, and then looking forward ahead, like, is this a good investment? Call it over the next 3 to 5 years. Reminder that my stock picks and projections are just my opinion for your entertainment. However, if you do like stock market analysis like this, going deep on stocks like Trade Desk, please subscribe to the channel, give this video a like. Thank you to everyone for your support. All right, if you're not familiar with Trade Desk, this is a sort of digital advertising platform that advertisers can use that spans basically, every media format that's available online, what they call the open internet. So whether it's display, banner advertising, mobile advertising, but most importantly, probably these days, is the connected TV. And of course, connected TV has obviously jumped quite a bit, certainly during the pandemic with Roku TVs, your Netflixes and Amazons and everything else. So this is really like the highlight of what Trade Desk is offering for investors, is being essentially the number one platform for investors to get a piece of the advertising dollars, the growing advertising dollars that is being spent on connected TV. You also have other video inventory, such as, say, if you're on a news website and you watch the videos on that website, and they usually have like some sort of pre-roll like they do here on YouTube, that would be included in there. And then audio as well. So one platform, the Trade Desk, gives marketers one platform to reach audiences across several different formats. And because they're sort of at the hub, right, they're the connector or the train station, if you will, they've gone through a lot of trouble to make, data management and privacy and all those things sort of streamlined in their platform. And thus they've become very popular and attracted a lot of ad spend through their platform. All right, so that's a quick background on what the Trade Desk is. But thinking from an investment standpoint, big picture kind of thing, obviously, if you're an investor today, you're looking to get into digital advertising, you have several options, right? Obviously, you have Google, who not only sells advertising, but has properties that display advertising. And their stock is much less expensive from a fundamental standpoint than Trade Desk is. So at least for me, when I think about Trade Desk, I have to keep in mind that Google and Amazon are also there as opportunities, as well as several other stocks, really. You could even get into Pinterest if you wanted to talk about that for a minute. But the bottom line here is that Trade Desk obviously is going to be growing at a much faster percentage than Google and Amazon because it's a smaller company. But you have to know that eventually, they're going to go against the Facebooks and the Amazons and the Googles. At some point, there is going to be a battle for spending in Trade Desk's favor. Is this connected TV environment and sort of video environment. But the hard part, of course, is that, Facebooks and Googles and whatnot, they want to grow as well. So they are going to be introducing solutions or trying to manipulate Trade Desk's opportunities in some way so that they can capture the dollars that are flowing outside of their little four-walled world that they operate in. So bottom line here, if you're interested in Trade Desk and you didn't get in early, which is basically where I sit, there's a lot of considerations. And that's not even talking about the fundamentals of the stock that we'll get into right here. All right, so stock price today for the trade desk, 507.17. This is actually a year-to-date chart right here. You can see the peak was $900. It's dropped quite a bit. They actually had a good earnings report here on May 7th or so, but then they sort of gave mixed guidance, I guess you could say, and the stock fell off a little bit. And at the same time, the market has been bleeding out on the tech stocks. You can see the NASDAQ, even just today, is down 2+%. So this is a real interesting situation if you were considering Trade Desk. If you were thinking about buying it on April 28th for $750, you certainly got to be in love with this $500 mark. But despite the slash in price, this was a stock that was, I would argue, overly inflated during the pandemic stock boom. And right now you've got a P/E ratio trailing 12 months over 100, an EPS trailing 12 months just under $5. Now we'll look at the valuation history for Trade Desk. This is a stock that launched in 2016, so we do have a few years worth of data here. Trailing PE at 104, not as high as we saw last December, in fact, quite significantly down. You do look back to 2019, which would be technically pre-pandemic. It's lower than the 126 that was there, but then you also had an 80 in 2018. So it's really hard to tell. I mean, I think maybe the 100, if you wanted to average these two, the 100 PE level you could say is about fair from a trailing standpoint. On the forward, though, which calculates what analysts expect to come forward, Trade Desk is in a weird situation right now. If you did the same average on 19 and 18, you'd probably have a forward PE, I'm guessing somewhere between 55 and 60. They're running a little bit higher right now, and that is because they had an extraordinary fourth quarter that also included political advertising spend. And since the larger elections are out of the picture, there's a lot of analysts, and we're going to take a look at that right now. There's a lot of analysts who think Trade Desk, which made 685 last year, could actually drop to 596 from an earnings perspective this year. So you have a declining earnings per share technically on paper. Now, on the high estimate, there is at least one analyst who thinks they'll beat last year. But that is why you kind of have a stock where the sentiment is shifting a little bit, not necessarily for the long-term negative future, but perhaps the short term of 2021 without election ad spend, it could be a problem as far as comping the year before. Now you look ahead to 2022, and it seems like the average analyst expects growth to sort of resume. This could easily hit $8 by the time the end of fiscal year 2022 ends. I guess it just depends on what your outlook is for the advertising market. Now, on the top line revenue side, everything looks pretty strong. $836 million last year. It would actually beat it by 35% if analysts are correct, and add another 30% next year. So somewhere in the neighborhood of plus 30 for this year and plus 30 next year, definitely strong growth, especially for a company that actually has earnings and is running a profit, because that's usually the harder part for some of these growing companies. All right, I'm going to share a couple comments from the earnings release. This is from the CEO, Jeff Green, and he's sort of talking about the future. And there's two big things in the future for Trade Desk, right? And I already mentioned one, and that is the growth of the connected TV advertising segment. And Green goes on to say it is his prediction that AVOD will outpace SVOD. And all that means is advertiser-supported video on demand versus subscription video on demand, right? So Netflix is a subscription video. some of the widgets and apps that you have on Roku would be advertiser supported, like Pluto TV is a name that just popped in my head. So the prediction is that advertising supported will grow more over the long term, which makes a lot of sense, right? Because I think we all have that sort of subscription fatigue, if you will, where everything costs $10 a month or $20 a month. So seeing more advertiser supported channels will be good. And if that happens, it's obviously great news for the trade desk. Then Green goes on to talk about the CTV market scale. And he uses this firm Omdia, I'm guessing how to say that. There are now more than 200 million active ad-supported users in the US alone. So in the United States, there are 200 million active profiles that basically advertisers can target with their spend through trade desks. By 2024, they predict that annual CTV advertising revenue will top $120 billion, which would outperform subscription revenue by more than 20%. They also say that markets such as UK and Germany will be the fastest growing CTV markets outside of the United States. Okay, so that gives us some context on the market as a whole. I think it makes sense to me that it's growing rapidly. The advertiser-supported video also makes sense to me because more and more companies are going to want to get in and run their channels. But the next thing that comes up is this sort of UID 2.0. And what this is basically the transition into a cookieless society. So you remember how cookies on the internet work and they kind of track your behavior. Trade Desk, in response to a lot of the privacy issues that are out there, they are developing this UID 2.0. And what they're trying to solve here is a couple things. The first one is obviously as Apple sort of came out about their, anti-tracking stance, if you will. You have to get to a point where Trade Desk and many others have to be able to work outside of the four-wall gardens of Facebook, Google, and Apple. So this is a chief concern for Trade Desk investors. Like, can they come up with something that will help advertisers target more specifically? And what's encouraging as I scroll down in this letter, and I'm just going to sum it up basically, is the fact that the work that Trade Desk is doing with UID, and there's another ID technology that's out there that lives outside of Google's world. There's a lot of brands and technology firms coming together to make this work. And what it ultimately does is it just gives you like that single sign-on for privacy controls, right? So today in Google, most of their tracking going forward is going to be done by you being signed in. That's why they always encourage you to sign in to search results and whatnot. Facebook essentially can't access that site without signing in. And then you have your own kind of privacy dashboard within those platforms. That's the kind of thing that Trade Desk is building, but they're not building it by themselves. Okay, they're working with brands and they're working with other properties within the internet to make it a much bigger, more universal thing. And they're sort of pushing Google to join this coalition. The X factor is they haven't joined yet, and we're not quite sure if they will. And then you sort of put on top of that statement, Google's had a little bit of a falling out with Roku lately on what they're allowed or not allowed to do on the Roku platform. And we could see a time where maybe Roku and Google break up. And so that's the kind of disparate market that is bad news ultimately for Trade Desk, but they're working hard and seeing success trying to unify. So that political environment is definitely a fork in the road for this particular stock. All right, from a valuation standpoint, here's what you're looking at with Trade Desk. This is from Seeking Alpha. You got a non-GAAP PE in fiscal year 1, basically the forward, right, of 80-30, okay? The gap forward PE is 144. The trailing gap PE is 103. So again, you have this year of uncertainty, but as you see on the non-gap numbers, you get into fiscal year 2, fiscal year 3, and it goes down from there. But you are essentially in the triple digits today. Now on the growth side of things, revenue growth year over year, plus 26%. Going forward, 30%, 3-year CAGR, 39%, 5-year CAGR, 49%. Again, these are, best guesses from analysts, so it's not like it's locked in stone. So you got good EBITDA growth going forward, EPS growth year over year, plus 100%, 25% or so this year, and 62% over the long term. Now, if we added a chart to consensus EPS estimates, here we are in December 20 that reported on Jan 21. You can see that for a 2-year period, it's not bad news. It's just like a little bit flat, certainly compared to the jump they made here. And then things start to expound after that. And if you did land on your EPS estimate of 641, your forward P today is at 80, okay? By the time you get to December 2023, you could argue that that gets a little closer to 50, and maybe a guy like me is feeling better about it when the forward PE is around 50. All right, on the revenue side, just looking at the raw numbers, 36% growth projected this year, forward price to sales of 21. So a 21 would have been okay maybe like 4 months ago, but with the market meltdown, I'm not sure. I would say that number of 21 is a little intimidating. Even next year, with a 27% growth, you're at 16. Frankly, I'd want to be under 10 in this current environment, and that wouldn't happen till December of 2024. All right, going over to TipRanks to see what the best performing analysts think. We definitely want to get fresh picks since they just had their earnings call, and of course the market is melting down, so let's just stick to yesterday and above. You've got 1, 2 holds, 1, 2, 3, 4, 5 buys. You kind of look at the numbers here, 600, 400 is the low, so that's minus 20%. Then if I had to eyeball these percentages, I'd say, maybe your average is in that 30% range, which would be somewhere here, 650, 675. That's what the TipRanks analysts are saying is essentially a target price for the next 12 months. All right, the other thing that I forgot to mention with Trade Desk is they just announced a 10-for-1 stock split, which obviously doesn't do anything to the fundamental stock price. However, I do think it allows for younger investors to get a piece of this company and could prove successful over the long term, just to take that stock from current 500, it would turn into 50, everybody would get 10 shares. So now I'm going to turn it over to you guys. Let me know, would you buy Trade Desk stock today right around $500? I've given you a lot to think about as far as where does this advertising world go? We know the good things. Are you worried about the bad things? Do you think the Trade Desk offers a good valuation for your investing dollar? We saw it was a little expensive. Or would you be looking for more deals, so to speak, companies with lower PE, price to sales? But the beautiful thing about the stock market is there's hundreds and hundreds of choices that we can pick from. And I definitely want to buy something on this pullback that we're seeing right now. Trade Desk is on my radar. Let me know what you think.